Have you been watching what's happening in the silver market? Because something just changed that most investors are completely missing. This isn't just another price fluctuation. We're witnessing a fundamental shift in the silver market structure that's going to be permanent. Let me show you what's really happening behind the scenes. For decades, the silver market has operated under a specific framework that kept prices artificially suppressed. But now, that framework is breaking down before our eyes. The latest data shows London facing a staggering 150 million ounce silver shortfall. This isn't a temporary imbalance. It's a structural deficit that's been building for years. Meanwhile, the COMEX, which has long been the center of paper silver trading, is experiencing an unprecedented drain of physical metal. Think about what this means. The two largest silver trading hubs in the world are simultaneously experiencing physical shortages. This isn't supposed to happen in efficient markets. What we're seeing is the culmination of years of market manipulation finally reaching its breaking point. The paper-silver market has been operating on the assumption that only a small percentage of contract holders would ever stand for delivery. That assumption is now being tested like never before. In 2025, we've already witnessed a historic 70% surge in silver prices. But here's what most analysts aren't telling you. This isn't just about price. It's about the fundamental relationship between paper contracts and physical metal. For every ounce of physical silver, there have historically been hundreds of paper claims. This leverage worked as long as most traders were content to settle in cash. But what happens when demand for physical delivery increases? The entire house of cards begins to collapse. The data shows that industrial demand for silver continues to grow relentlessly. Solar panels, electronics, medical applications, all requiring physical silver that simply cannot be substituted. Meanwhile, mining production has struggled to keep pace, creating the perfect conditions for a supply crunch. Central banks, which have been aggressively accumulating gold, are now turning their attention to silver. They understand what's coming in the global monetary system. Quick aside, if you're sitting on $100,000 or more in retirement accounts, I put together a free guide on how gold IRAs work. It's in the description. Covers how to get physical gold into your retirement account without tax penalties. Worth checking out if that's relevant to your situation. Anyway, back to this market structure change. What we're witnessing is a rare squeeze scenario with futures spot misalignment, as silver prices surge toward historic highs. In normal markets, futures and spot prices maintain a predictable relationship. But when physical metal becomes scarce, that relationship breaks down. The futures curve for silver has shifted dramatically, moving from contango, where future prices are higher than spot, to backwardation, where spot prices exceed futures. This is a classic signal of physical shortages and typically precedes major price movements. Let's look at the historical parallels. In 1980, the Hunt brothers attempted to corner the silver market, driving prices to the equivalent of over $120 in today's dollars. But that was a temporary manipulation. What we're seeing now is different. It's a structural change driven by fundamental supply and demand imbalances. Or consider 2011, when silver approached $50 before being aggressively capped. The difference today is that the mechanisms used to cap the price are losing their effectiveness. The physical market is asserting itself over the paper market. The COMEX has traditionally been the price-setting mechanism for silver globally. But with physical inventories declining rapidly, its ability to maintain this role is being questioned. When registered inventories fall below a critical threshold, the entire pricing model becomes vulnerable. What's particularly significant about the current situation is that it's occurring against the backdrop of de-dollarization. As countries around the world reduce their dependence on the US dollar, they're increasing their holdings of precious metals. This creates additional demand pressure in an already tight market. The BRICS nations have been particularly aggressive in accumulating physical metal. They understand that whoever holds the physical asset will have leverage in the coming monetary reset. Let's talk about the mechanics of how this market structure change is unfolding. The COMEX operates on a fractional reserve system, similar to banking. It's not designed to handle mass delivery requests. When too many contract holders stand for delivery, the system experiences stress. This is exactly what we're seeing now. Delivery requests have surged to levels that threaten the entire structure of the market. The response has been predictable: rule changes, delivery delays, and cash settlements at premiums. But these are temporary measures that can't solve the underlying problem. The London Bullion Market Association, LBMA, faces similar challenges. As a primarily over-the-counter market, transparency has always been limited. But the data we do have suggests that available physical silver is declining rapidly. What makes this situation permanent rather than temporary is the convergence of multiple factors: industrial demand growth, investment demand surge, mining supply constraints, and geopolitical tensions. These forces aren't going away, they're intensifying. The implications for investors are profound. For decades, the paper price of silver has been the reference point for the market. But as the disconnect between paper and physical markets grows, we're likely to see a two-tier pricing system emerge. Physical silver will command significant premiums over paper contracts. This isn't speculation, it's already happening. Premiums for physical silver products have reached historic highs, reflecting the reality that paper prices no longer accurately reflect the true market value. What's particularly interesting is how the mainstream financial media has largely ignored this developing story. They continue to focus on day-to-day price movements without acknowledging the fundamental changes occurring beneath the surface. The question investors should be asking is not, what is the price of silver today? But rather, can I actually acquire physical silver at the quoted price? Increasingly, the answer to the second question is no. This permanent change in market structure has implications beyond just the silver market. It represents a shift in how commodity markets function in an era of increasing physical demand and geopolitical fragmentation. The global financial system has operated for decades on the assumption that paper claims are as good as physical assets. That assumption is now being tested across multiple markets, with silver at the forefront. What happens next? The path to a new equilibrium will likely be volatile. We can expect periods of extreme price movements as the market adjusts to the new reality. But the direction is clear. The physical market will increasingly assert its dominance over paper trading. For investors, this creates both risks and opportunities. Those holding paper silver without the ability to take delivery may find themselves vulnerable. Those with physical metal or fully allocated storage will be positioned to benefit from the repricing. The timing of these changes is always difficult to predict precisely. Markets can remain distorted longer than seems logically possible. But the forces driving this structural change are relentless and accelerating. What we're witnessing isn't just another cycle in the silver market. It's a fundamental and permanent change in how this critical metal is priced and traded globally. The implications will reverberate through the financial system for years to come. The silver market structure has changed, and there's no going back to the old model. Those who understand this shift early will be positioned to protect their wealth and potentially profit significantly as the new reality becomes widely recognized. The question is, will you be one of them?